Are you a property manager struggling to streamline your process? Well, we can do just that with QuickBooks Online. QuickBooks Online is an amazing tool for streamlining your entire workflow from finances to property management. Hi, I'm Nick from Income Digs, and in this video, I'm going to show you exactly how you can optimize your QuickBooks Online setup for your property management business, for your real estate investing business. If you're interested in this, if you're a real estate investor, if you're getting into bookkeeping for this industry, I encourage you to check out my end-to-end course, Real Estate Accounting Bootcamp. You can check out the details and you can sign up. We have a link in the description. But let's get into today's topic, which is specifically QuickBooks Online workflow optimization for property management. So what we're going to talk about today is we're going to talk about your basic QBO designs. We're going to talk about some essential elements of that, your setup, okay, how we're going to establish tenants, how we're going to establish properties, how we're going to differentiate those two, how we're going to start managing our finances when it comes to accounts receivable, accounts payable, being able to see what those reports look like. We're going to talk about automation opportunities when it comes to getting some of these transactions on autopilot, day-to-day expense tracking, and finally, we're going to talk about integration opportunities and scalability all today. So starting out with our design challenges and our setup here. So what we want to do is we want to establish what's called a two-dimensional versus a one-dimensional chart of accounts. Your chart of accounts is your list of categories, right? And one of the main pitfalls I see from real estate investors and their bookkeepers and property managers is we create this really long chart of accounts where we have very specific accounts for various properties or owners that we're dealing with. And that's just going to get way too challenging for us. Okay, so we want to be able to have it two-dimensional. I'm going to show you how to do that. We have to understand that these multiple dimensions are not necessarily connected. And we have to realize too that there's some reporting shortcomings of one way versus the other. So we need to know too, QuickBooks Online was not created specifically for real estate investors. We're a little bit different. We do things a little bit different. We have a pretty complex business. Okay, so if we can make some tweaks to QuickBooks Online, it's an amazing tool for streamlining our processes. We just got to know what those tweaks are. That's what we're going to talk about. So let's get into QuickBooks Online, see what the setup looks like. So the first thing is that two-dimensional chart of accounts. And again, by far, one of the biggest, most common pitfalls I see with new investors, new property managers, is you're going to go into your chart of accounts and do this here, creating really specific accounts for specific properties. We do not want to do that. It's not scalable. It's not possible for us to grow. We want to create something a little bit more generic like this. Okay, so if you're the owner of the real estate, it'd look like this. If you're a property manager, you're going to have some accounts for the owner's funds payable, right? So those are the funds that you receive on the behalf of the owner and that you're going to pay them out. Generic accounts is essential. And we also want to think about how we're going to differentiate properties and our owners, okay? Properties, owners, and tenants. So if you're a property manager, you almost definitely have tenants for whom you're responsible for collecting rent. If that's the case, you're going to want to set up every tenant as a customer here. And I'm going to suggest this hierarchy here. Notice that the human being, Juliet and Olivia, these two renters here are down to the third level of a hierarchy. So what I want you to do is I want you to create a customer for your owner. So this is EAB Properties. That's an owner for whom I manage properties. And then a property, 122 Buffalo Street, 123 Main Street. And then below that, your actual tenants are going to go here. And it's these tenants who you're going to invoice. Now, this covers one aspect of it. This is going to cover us getting our funds from our tenant and managing how much we might owe to our property owners. It won't necessarily give us property by property reporting. For that, I'm going to request that you add another attribute. So if you have multiple properties, multiple owners, you're kind of scaling, you have a few, okay, more than one, I think it's worthwhile for you to have QuickBooks Online Plus. If you have QuickBooks Online Plus, I want you to turn on class tracking. So we're going to do that right here. I'm going to go to Advanced, Track Classes. I'm going to turn that on. I'm going to click Save. Okay, so now what I'm going to do is I'm going to have two aspects here. I'm going to have my customer and I'm going to have my class. Okay, so when I create an invoice for one of my tenants, let's do one for Olivia, let's do one for Juliet. Okay, so there's Juliet, so she's apartment A, okay? I'm gonna do this as of 2018, just so it shows up on a report and so we can see it clearly, okay? So I'm gonna do the rent for the unit that Juliet is renting here. So that'd be 122 Buffalo Street, apartment A, okay? $850, and here I'm gonna add class as well. Now notice when I add class, I'm just gonna do it to the property level, nothing further than that. I'm gonna save and new, I'm gonna create another one for Olivia. Okay, so there's Olivia in apartment B. I'm not going to send it to her. And here I'm going to do 122 Buffalo Street, apartment B rent. Okay, and here I'm going to indicate class as well. And then the last one I'm going to do is, let's do another owner, a different, actually we'll do two more. We'll do one for 122 Buffalo Street. I think we had, or no, 123 Main Street. So that's another property owned. Okay, John Smith. I don't know if I have a product or service. Let's see here. No, I'm just going to do this one. Okay, and then I'm going to do one more for a different owner altogether. Okay, so this one's going to go to Anvil Properties, Bernie. Okay, so this is 456. Okay, so again, adding class and adding my my tenant. Okay, so when I save and close this, what I'm going to gain here, first and foremost, is I'm going to get this really nice little setup where it shows me how much is overdue, how much hasn't been paid yet for my various different customers, my tenants, right? So that view is really good. From a accounts receivable standpoint, that's absolutely essential, okay? And I can see my balance for each, okay, here, right? That's great. However, if I go to my reports, let's do balance sheet here. All right, so I've got 3,500 in accounts receivable and I've got 3,500 in owner's funds payable. So again, we're doing this from the perspective of the property manager. Okay, if you're the property manager, those funds you receive, those aren't revenue yet. Notice my net income is blank. These are funds that I actually owe to the owner. Okay, so I'm going to track them right here. Now, here is where we have to think about the difference between tracking at a hierarchy level and doing it at the single one-to-one level. So if I display my columns by customers, notice how gigantic my P&L gets, right? So I have, here's one owner, a property owned by that owner, tenant, and then a total, right? Then I have another owner, property, tenant, and so on, okay? So I'm getting this gigantic report that's almost impossible to read, right? So this is why, if we go back to my report list, while I am gaining huge value by having my tenants listed because I can manage who owes me what, having class, if I go track columns by class, super nice and neat, shows me how much is showing up in the owner's funds payable for each of these properties, okay? And then I can filter this down to say, just give me the properties owned by this one owner, right? We can do all that, okay? So that is super dynamic, right? We're able to do a little bit of both. We're tracking who owes us what in our accounts receivable, and we're able to track a nice, neat, in this case, balance sheet by property. Now, you could also do this by owner. You can do this in a few different ways, but we have to understand that it's a two-dimensional account that enables us to do exactly that. Now, I don't want you to use location for tracking properties. That is usually going to be reserved for tracking multiple entities within one QuickBooks Online subscription. If you're interested in that, I encourage you to check out the deep dive that I do on that. So multiple business entities in one QuickBooks Online subscription. I have a deep dive video on that. Check that out as well, because that is something that is really, really valuable, especially for us real estate investors. A lot of us have multiple accounts, multiple entities, right? Okay, so those are our properties and tenants. Now, we talked about too, having the two-dimensional chart of accounts from a owner standpoint. So if you're the owner and the property manager, you're going to have your properties on your balance sheet, okay? If I'm the property manager, I don't have my properties on my balance sheet here, right? You don't own the properties. Okay, now you might do a little bit of both, in which case this is going to be really valuable. So let's get a property on our balance sheet. Now, again, I have some specific lessons on exactly how to transport a HUD onto QuickBooks Online. So I'm gonna kind of whip through this one relatively quickly from how the journal entry happens. But what I wanna show you is the difference between a one-dimensional chart of accounts and a two-dimensional chart of accounts. So what I'm gonna do is I'm gonna take this, like the bad way of doing it, meaning like 122 Buffalo Street buildings, 122 Buffalo Street land, 122 Buffalo Street closing costs. I'm going to put this property on my books. I'm just kind of putting arbitrary numbers, so don't pay attention too much to, why it's 100,000 versus 25,000, etc. I'm just throwing something on there. I'm also going to put a conventional mortgage. Okay, so 122 Buffalo Street mortgage, I'm gonna put on there, all right? And then I can do the same thing for that 264 Union. That's another property that I'm gonna demo with here. So 264 Union land, 264 Union building, 264 Union closing costs, and 264 Union mortgage. Okay, so let's say this one's worth a little bit more, 50,000, 150,000. Closing cost of 7,500, and then a mortgage of, let's see, what is that? That is 275. Okay, so if I were to do this, let's see what it looks like on my balance sheet. Okay, so I've got 122 Buffalo Street, 264 Union, and then I have my mortgages down here. And so this looks fine. This looks, I have my total per property. It's nice and neat. It's great. But the problem is we had two purchases of property, two properties are on there, and look how many lines we've added to the balance sheet. So what we're doing is we're growing vertically without taking advantage of the potential to grow horizontally or laterally, okay? So what we wanna do is, instead of using these accounts here, let's drill down into that journal entry and let's make one adjustment. I've already turned on class tracking, so my class field shows up here. So what I wanna do is, instead of using this really specific 122 Buffalo Street building, I just wanna use a really generic account for building, a really generic account for land, a really generic account for closing costs, and we can do the exact same thing for our mortgage as well. We can have an account, say, for conventional mortgages. Now, when I do that, now I'm gonna use class, okay? And so what I'm doing here is I'm really retaining the exact same information that I did before, but now I'm doing it in 2 dimensions, okay? And so we're gonna see what this looks like on the balance sheet. There's land, building, closing costs, and then here's my conventional loans. And here I'm gonna go 264 Union. Okay, now when I save and close this, on my report, okay, it's tightened things up. I have it way more generic. It's totaling what I have for those 2 properties. But now when I go display columns by classes, I'm gonna be able to see the value of my properties. Okay, so there's 122 Buffalo Street, here's 264 Union, here's how much I own for each of those. And so this could be a situation where, like, maybe I own 122 Buffalo Street and 264 Union, but I don't own 123 Main. Maybe I'm managing that property on somebody else's behalf, okay? And if that's the case, then maybe I'm gonna be tracking this more as income, and we're gonna talk about that pretty much next on the financial management side of things. But what I wanna make sure we're clear on is a 2-dimensional chart of accounts is absolutely essential. Again, we talk about this in great detail in the course. Check out Real Estate Accounting Bootcamp. I promise you it is jam-packed with tons of examples and tons of reasons why this is the absolute best way to set up your books. So let's talk a little bit more about financial management. Now I have my owner's funds payable here, okay? So that's all sitting right here. Now when I pay those out, okay, that's when I'm gonna start recognizing income, okay? So when I write a check to my owner, I'm going to pay them out this $1,800, this $850, this $850, right? So if I were to do that just for 123 Main, okay, I could write an expense, I could write a check. I owe them $850, right? So I'm gonna do that for, and I think who owns 123 Main? I think it's Anvil. No, it's my EAB, right? So EAB is my customer there. So I'm gonna write the check to them here. I'm gonna write it for 123 Main, right? And here I'm gonna indicate that I'm gonna pay them out of my owner funds payable account, $850, okay? I'm gonna indicate this as 123 Main Street, but I'm not gonna give them $850, right? I'm going to retain some funds for property management services, okay? So property management income will now show up here, and I'm gonna do a negative. Let's say that I'm gonna charge them 6%, right? So I do 0.06 times 850, gives me $51. I can do a negative 51. And this is the check that I write to them, $799. So what that will do is that'll move the $850 out of my account. The money's gonna come from my checking account, right? And I'm gonna recognize $51 in income. So if I save and close that, let's see how this reflects on my balance sheet. Again, we'll display columns by classes. Okay, so notice what happens here is that this owner's funds payable for 123 Main zeroes out, and my net income increases to $51, and this as a property manager shows my income. Okay, you don't want to record all of your rent as a property manager on your P&L. You're just going to be tracking your property management income. Now there's another way that we can do this. We can invoice our our owners for the property management fees, and then we can record some credits. Now I have a specific video on that as well, so I'm going to encourage you to watch that one to get into that way of doing things. We'll link to it here. It'll take a little bit too long to get into here, but there's another way to do it where you can start invoicing your owners for the property management fees and then use credits to offset what you owe them and what they owe you. So next I want to get into some automation opportunities. So if we are invoicing our tenants, we want to think about the fact that, hey, every single month rent's pretty much the same, right? So can we automate this? And so we absolutely can. I'm going to drill down into one of these invoices that we have. So this is my invoice to Juliet, all right? And we want to make this automated. So what we can do is we can go make recurring. Now, before we do that, I want to go to a few settings that we can take a look at. So if we go into our gear icon here and go to account and settings, we're going to see that we have on sales, we have a few different items here. So late fees, okay? So we can do a default late fee. We can do a flat fee with a grace period. Now, we realize that this is probably a little bit restricted as far as what your late fees might actually be per your lease. You might do a flat fee, then a daily fee after that. QuickBooks isn't quite there yet. They're only giving us one, but notice here I have a flat fee, $20 once per invoice with a 5-day grace period is going to automatically get attributed. And I also want you to take a look at invoice reminders. Definitely turn those on. These are items that seem really simple, but they used to not be part of QuickBooks Online. They are now. So make sure you have invoice reminders on. Now let's go back and let's make this a recurring invoice. Okay, so I'm going to go here, click make recurring. Okay, and it's going to immediately bring up this recurring invoice template. Now here's my template name. It's just going to default to whoever the customer is. That might be fine. You might want to add something else to it. So this is going to be scheduled, okay? As opposed to reminder or unscheduled, it's literally going to make this invoice, okay? And this is where I want to probably create it X days in advance, okay? So typically with rental properties, you're invoicing on the 1st of every month. So notice here, my interval is 1st of every month. That's the date that the transaction is going to hold. So my invoice will have that date. We can create it ahead of time, and it's still going to have the future date. So what I mean by that is, like, let's say that I have a recurring invoice set up for the 1st of every month. I'm sitting here in February, okay? And so on March 1st, the invoice will get created. But on February, let's call it 18th, February 18th, okay, it will create the invoice that is due on the 1st of March. And the benefit of that is if we include our email, okay, if we include the email for our customer, it's going to automatically send her an email that she can then pay ahead of time, which is fine. They don't have to pay ahead of time, but they often do. And I want you to also include unbilled charges. That's a really good idea. I'm going to show you those in a second. And you definitely want to set up your automatic, your online payments. I'm going to turn that off because I don't think I have it set up yet. So we're going to create monthly on the 1st of every month, starting with March. Okay, and then end date, you could either say, hey, I know when the lease ends, or if you have one that's probably gonna go month to month, you can leave it as open-ended for now, come back and delete it if and when your tenant leaves. All right, here you're gonna go down to the actual invoice itself. Unfortunately, we gotta turn off service date because that's not gonna automatically update with every month, but your product and service is gonna stay the same description. You can do monthly rent. If you had like a pet fee, you can put that in here too. I don't know if I got one of those, let's see. Yep, pet deposit or pet fee, whatever. Okay, and notice my class is coming up too. I can save that template and I'm ready to go. Every month it's going to create. All right, it's really, really valuable. Now, I mentioned unbilled charges. You probably want to have those as well. So setting up billable expenses is essential for a property management company. So going into expenses and then here, make expense items billable, you definitely want to do that, okay? Track billable expense items as income. The reason for that is when you incur expenses, as you typically do as a property manager. So let's say I incur like a repair expense. Okay, so let's say that I paid Lowe's. Okay, came out of my checking account. Let's say it's for repairs and maintenance right there. And let's say it's for 122 Buffalo. I can indicate who it's for. So if like Juliet will owe this back to me, I can indicate Juliet here, and that's gonna add it to her next invoice, potentially with a markup if you wanna do that as well. We can also have billable expenses to our owners, right? So if it's not the tenant's responsibility, but it is 122 Buffalo Street's responsibility, the owner for that property, this will help us track to ensure that when we pay out to 122 Buffalo Street to that owner, we're not paying the $632 that they're owed back to us. Okay. The last thing I'm going to talk about with recurring transactions is going to be your expenses. Okay, so just like recurring invoices, we often have recurring expenses, and these often take shape in utility bills or mortgage payments. So let's say that we spend every single month, let me see what we got here, a certain amount on a mortgage payment, something like this, right? So this $565.03. Okay, so I can categorize this right here, and I can say that I paid M&T Bank, I believe is a vendor here, and I'm gonna split this. Okay, so I paid some to conventional loans, meaning I'm paying principal for 122 Buffalo Street. Conventional loans, let's say that it's $150, and then some of it was for interest. Okay, so the rest of this was for interest for 122 Buffalo Street. Now I can include here my customer as well. Would I really be paying a loan on behalf of my owner? Probably not, but again, this could be the situation where you own and manage the property. Okay, so what I'm gonna do here is I'm gonna record this transaction, 56503. So I can apply and accept. Now, once it's created, I wanna get into that transaction. So I'm gonna go to my audit log. And what you can do to save yourself time, you can take that expense that you know is going to hit your bank feed every single month, and you can make it recurring. And you can say, hey, every single month on the X day of the month, I'm gonna have an expense that goes to principal and interest. Now, we know that our principal and interest allocation is going to change every month, but just the simple idea that the transaction will be created and the total amount will be accurate really helps us. We can have that transaction created, then we create a workflow where we go in and make some edits to this. Now, I talk about the day-to-day, the operations side of that in Real Estate Accounting Bootcamp, and we actually talk about how we can make use of a VA, a virtual assistant, and a bookkeeper to really help to track these principal and interest payments exactly. Okay, so that is another set of automation. Definitely check out recurring transactions for sure. Now, when it comes to the day-to-day expenses, most of that is going to happen through your bank feed here. So you're gonna set up your bank feed, you're gonna have transactions coming through, and you're gonna need to have some rules in place to understand what expenses are for which properties, which owners, okay? So you can have one account and manage it all in one place. You're gonna need some kind of receipt tracking infrastructure such that you understand which expense goes where, or you can set up different bank accounts. I personally like to have one bank account, everything funnels in there, and then we have some rules set up. Potentially different vendors, potentially different amounts we would know are gonna go to a certain place. And we're gonna take all of these transactions, and every single time they come through, we're gonna categorize, potentially split them up. Okay, so repairs and maintenance. Okay, definitely indicate who the customer is every single time. If it's something that the tenant would be responsible for, we'll indicate the tenant. If it's something that just the property is responsible for, indicate the property, indicate billable if it is, and then add that extra layer for class. This again is going to give us that super simple reporting. This is going to track who owes who what. This gives us the reporting part, okay? And we can add that and certainly add attachments as you go. All right. So I know we're whizzing through this, but this is your general setup for property management. Again, we have those little offshoot videos I want you to check out as well. Now, QuickBooks Online, the reason why we're going to recommend this as the best financial solution for a property management company is because it's scalable, it's customizable, and we can actually integrate it with other apps. So if you check out other apps here, so some of you are probably using Buildium or Stratifolio, and you can do some integrations as well. There's also some apps within this marketplace, whether it's for reporting, whether it's for CRM, website setup. There's a bunch of released, by the way. Tenant Cloud is in here as well. So there's a lot of connection points. And when it comes to financial management software bookkeeping, QuickBooks is really the leader. It's not set up perfectly for property management, we know that, but it has the biggest potential because it has all these different connection points. Okay, and that allows us to potentially scale. So again, this is an introductory, optimization of our workflow for QuickBooks Online. I'm interested in your questions. I want to know what else you want to learn about this topic. We have several other videos kind of coming out in this series as well. So I guess the essential element here is to know that QuickBooks was not created specifically for us as property managers, but it can be super powerful if we set it up the right way. So if you found this video valuable, I'd really appreciate if you give it a like, subscribe to my channel. That way